thoughts on all of that, what to expect at the open for the local market too. Stan Shunru joins us from IG. Stan, good to see you there. Yeah, it was interesting, wasn't it? Risk assets really coming off overnight. Just take us through the reasons for this. The concerns out of Europe too, in particular, rearing their head there. Is this something that, you know, could see a pullback gathering steam?
Yeah, with the way the markets have gone over the past few weeks, it's hardly surprising for investors to find a reason to actually start selling this market. Of course, everyone's been calling for a correction for a little while now. I mean, you look at the Aussie market, for example, last week we charged up about 2.1%, pushed through to 49.50 yesterday. So, I mean, it's just one of those situations where any excuse will be used as a reason to sell. And at the moment, the excuse is back on Europe's hands. Of course, we've got those rumours that was speculation that Mario Rajoy, which was the Spanish PM, might be forced to step down after accepting some illegal cash payments. At the same time, we've got Silvio Berlusconi, the former Italian PM, catching up in the polls to the current leaders, and this has really spooked markets, and we are seeing those peripheral yields, particularly Spain and Italy, starting to push higher yet again. Of course, that's what had held the markets back for a long time last year. So with focus back on those yields, it's only a matter of time before markets start to get into a bit of a near-term correction, I suppose. And with the ECB set to come out on Thursday as well, then we could expect to see some further volatility on the European front. There have also been some comments suggesting that European leaders, particularly at the ECB, would be actually happy to see the euro pulling back in the manner it did. Of course, it tested that 137 level on Friday, and we've since seen it pull back into the 135 region. Ideally, they'll probably want to see it trade around 1.3 just for trade reasons, and of course to just help the European economy stay on this recovery path. But for now, it certainly seems like Europe will be a source of volatility. I suppose one of the most surprising factors was the Aussie dollar managing to hold fairly well despite a fairly risk-off session, particularly with European equities and US equities struggling as much as they did, along with commodities. It's always surprising to see the Aussie dollar not being sold off as well. We have seen it hold at around that 1043 level ahead of the RBA today, and it really seems like the sellers are a bit skeptical of being caught out when the RBA decision eventually comes out. Of course, it's expected to stay on hold, so the statement will probably be where we'll see the volatility come in from. At the moment, I think there's just some skepticism that we could see a fairly hawkish statement by the RBA, and that would be supportive of the Aussie dollar, and that's probably why we're not seeing it being sold off quite as much. But the way to play it is probably just to look out for that 104 level. Should we get, I suppose, a very dovish statement, then we'll probably look at the 1004 level for support. Should we break through that, then we're looking at the 1038 level, which was last week's lows. So those to the downside, those are probably the levels to look out for. Should the statement come in hawkish, as some are expecting, with the RBA just sounding a little less dovish than it did in the last statement, then probably that 1048 region would be the resistance for the Aussie dollar in the near term. But with balancing out the global factors and the local economic factors will be the difficult part for the RBA in today's statement. Of course, a lot of the matrix locally just continue to show signs of weakness, particularly in the jobs market, where we do really need some sort of strength to help underpin growth and confidence. But at the same time, some readings have come in fairly positive, but especially on the global front, that's probably one thing that will keep the RBA encouraged as China continues to show signs of stabilization. So it will really be an interesting statement to see how they balance out the global factors and the local factors today.
So I guess looking at the equity markets, what's the IG call for the open on the ASX 200?
Yeah, we're actually looking at a 0.7% fall for the Aussie market at the moment to about 48.73. So that's quite a bit of a pullback from above that 4,900 level where it was trading yesterday. Of course, we'll have a few things to look out for, particularly with the resource sector where we saw commodities struggle along with like their London listed peers for the likes of BHP and Rio struggling along with the FTSE yesterday. So I suppose that's where the weakness will come from. It'll be a fairly risk-off session. Look out for BHP to be down around 1% to 37.40 at the open. This will probably spread through the rest of the sector. At the same time, we've got a few company updates or company reports coming out. We've got Cochlear, Transurban, Navitas. We also have a business update from Macquarie, which should be very interesting. Of course, we saw the stock stall as it approached that $40 level, so we'll need to see how they're progressing. Of course, they've been one of the underperformers of late and have disappointed earnings-wise for a while now. So we'll really need to see if they're still on track for the year. And this should be one of the bigger sort of updates of the day. At the same time, we'll probably continue to hear some commentary on these banks that continue to trade at pre-elevated levels, potentially some revaluations. And of course, that interest rate decision will have a big part to play in the market. We'll probably see a fairly flat consolidation ahead of the decision. The first source of volatility will be at 11:30, where we get that trade balance figure expected to narrow, the deficit to narrow slightly to -0.8 billion. So we'll have to see how that goes. I mean, we might even see the market start to drop well ahead of the RBA decision. And of course, in the aftermath of the decision, we always have to look out for the consumer space, the retailers, of course, the banks, because of that quasi-bond play. And then we'll have to wait and see how the market reacts to this heading into the close.
All right, Stan, lots to look out for then. I look forward to talking to you a little later. Thanks for that.
Cheers, Ray.
Yeah, and as he mentioned, we are waiting for results to drop. Just seeing some news actually coming through from Asciano saying that a 24-hour strike is to stop at least 300,000 tonnes of coal reaching port. So Asciano there with that news just coming through on Reuters. Of course, as we mentioned there, reporting season kicking off today. Of course, the big names we're watching for, Cochlear and Transurban. We'll bring you those numbers as soon as we get them. I'm just seeing the results initially.